Mr. Jignesh Shial, who's a director research at and head of the BFSI sector at InCred Capital. Welcome, Mr. Shial. Now, first off, I want to talk to you about the Bajaj Housing Finance IPO. Your quick views, both with regard to the listing and the justification of valuation. Now, nearly at 6.5 times plus price to book 1 year forward.
Yeah, hi, and thanks for inviting me. Obviously, we have been liking the stock, considering they have done pretty well in the last 3 years, and last 3 to 5 years altogether, 91,000 crores kind of an AUM, and they have the right mix of AUM and all, and has an ability to grow also quite in a similar kind of a way. Obviously, there had been liking for such names where there is a pretty strong promoter background. Along with that, the quality of growth is pretty good, and the compounding valuation. I mean, the growth is also compounding in nature. Obviously, people are going to like it up. It's a little bit stretched for a while. I think listing a lot of people are right now in the kind of a happy mood right now. Gradually, we think there could be some consolidation or correction is likely, but over a mid to long term period of time, we continue to like this name. I think they will do quite better, just like the parrot.
All right, Mr. Jignesh, for a lot of people, like us who have not actually gotten the privilege of getting the IPO allotment, do you think it's the right time to buy Bajaj Housing Finance?
Look, I mean, as you guys rightly pointed out, being a housing finance company with mid-teens kind of an ROEs and 2% kind of an ROA, doing 6.5 times, it's little stretched kind of a valuation. But as I said, there could be some in the near term. There could be some consolidation or correction might be possible purely based on valuation. But if somebody is looking for mid to long term kind of an horizon, I think it's pretty good story to opt for, because housing finance is a safe asset. The management is pretty good, and growth seems to be in a pretty good shape, at least for now, at least for the next couple of years.
Got it. Jignesh, let me talk specifics. Growth.
Yeah.
Till FY24, the company has clocked an AUM CAGR of 72%, which is just phenomenal for the kind of base that it has. Continues to do almost 35% AUM growth. Do you believe a 30 to 35% kind of CAGR over the next 3 years is something you would pencil in as an analyst?
Yeah, sure. I mean, if you see housing finance I mean, mortgages is a pretty big market, and Bajaj at 91,000 crores still remains a pretty smaller player out of it. They have a reach. They are able to reach to deeper pockets, I mean, deeper geographies altogether. And they have that kind of networking as well as deep pockets to manage that kind of growth. So still doing 30-35% kind of a growth at 91,000 crores kind of an AUM is still pretty much likelihood possibility for somebody who is for next 3 to 5 years. If somebody is looking at it, I think doubling the balance sheet is also not something pretty much impossible kind of a task. It's quite likely that they will be able to manage it up the way how they have a reach as well as the strong balance sheet.
Right. So essentially, they will double up every 2 years because they'll compound at 35%.
I think 3.5 years is more likely.
Okay.
So I'll be giving it somewhere between 30% kind of a number. So
Got it.
Roughly around 3 years is something which is quite likely.
Okay, understood. I get your metric. Okay, and just as they go about doubling, right? So maybe 25 to 30% kind of growth is what you're ascribing. Maybe if they double in 3 years, likely. What's the kind of operational efficiency which starts to kick through? Because essentially what's happening is your ROAs have expanded on a consistent basis. They are on an improving trajectory over the last 3 to 4 years. Do you believe that ROAs can breach the 3% or even 4% mark, which a lot of housing financiers, at least the smaller ones, more efficient ones, are doing?
Rather than purely efficiency, the smaller affordable guys basically has a relatively better spread or a relatively big larger spreads. They make it up because they are into a kind of more into affordable segment side or riskier segment side altogether. Bajaj, I think, is far more conservative in that particular space. They have a much more balanced mix, with having, I think, 56-57% of housing, a bit of a LAP, LRDs as well as corporate. I think they will be more aspired to do a kind of mid to premium housing altogether rather than going completely tilted towards affordable one. So very margin will be more or less in the similar range what they used to make it up will be more similar to large banks or large NBFCs rather than pure affordable housing finance companies. The operating leverage can still kick in over a period of time because HDFC had one of the finest models as far as OPEX was concerned. They used to do cost to income in the single digit itself. Bajaj has a long way to go, but I think operating leverage can be a big trigger which can play out over a period of time once the company achieves a kind of a size. Margin trajectory, I think, should remain more or less similar because they are quite competitive with large private sector banks and PSU banks like SBI and all. So I think in that particular concept, I think margin expansion would be fairly limited. So I think from 2.1, I think reaching towards, aiming to reach towards 2.5 or 3 would be a far more interesting thing to watch out for. But crossing 2.5 or 3 and reaching to 4, I think that would be a little difficult task to do, at least considering the kind of asset mix they have it right now.
Right. So, Jignesh, then what do you prefer? Do you prefer small financiers or do you prefer Bajaj Housing when it comes to both valuation and growth?
Look, I think Bajaj Housing is something that I will be considering, more comparable to large private sector banks or large HFCs like LIC and PNB and all. Whereby, you have to think about those valuations a little expensive right now. Whether you have to think about when you're thinking about selecting a private sector banks within that particular space, even Bajaj Housing will be one of the options that investors can look into it and all. Affordable housing one is more like a small and mid cap kind of an ideas, which generally has a kind of high growth, high returns, and relatively higher risk also involved with it. So I think Bajaj Housing I'll compare more as a selection for a mid to long term kind of a period, and that too a selection would be more within the large private sector banks and large PSU banks rather than purely comparing it with affordable housing companies in general.
Understood. And therefore, if I were to just try and compare metrics, right? Generally your private sector banks ROA is roughly 2%, odd 1.8 to 2%. Bajaj Housing is doing nearly 2.5% in terms of ROA, and you're also seeing stronger growth in Bajaj Housing. Where should the fair valuation lie in your view?
Look, so when we had written a couple of notes already, we were basically expecting them to, list the subsidiary in the range of 3.5 times price to book. I mean, the pricing had come up almost in the similar range. Now, giving it a further premium to it, it all depends upon the kind of risk appetite the investors has it. But I think giving it even a little bit further premium to it, considering Bajaj is a brand and a pretty stronger promoter background and all, I think giving it around 4.5 to 5 would be quite likely possibility that I'll be comfortable with it. Over and above, if somebody wants to go for it, then I think it will be a little stretched than what we're expecting. And this 4.5 will also be justified by the kind of growth they're doing.
Got it. Jignesh, now from Bajaj Finance's perspective, what does this do? Because you've got 1/3 of your book now in a separate listed entity. Can Bajaj Finance grow faster? Do the ROAs get better? Because part of that 2.5% kind of ROA book is out of the Bajaj Finance fold. How is it looking now overall?
Absolutely. You're completely bang on the analysis. I think the standalone Bajaj Finance should do relatively better ROAs because they anyhow have been doing pretty good, 4.5 to 5 kind of range. I think they will be seeing a kind of an improvement. But I think overall ROEs might still remain relatively subdued because obviously having an housing finance subsidiary, the ability to take a leverage generally improves because of the lower risk weight that housing finance generally contains. And Bajaj standalone has relatively more unsecured kind of a book under the kitty, though they're growing further on asset-backed model altogether. But I still feel ROEs might not jump up in that manner, but ROEs definitely should see a kind of an improvement for standalone entity altogether.
Awesome. Thank you so much, Jignesh, for all of that perspective. Completely out of time on this edition of the SMID show. Thanks, Jignesh.